You're watching Market Watch, a brief overview of the key events from the world of finance. As expected, the key event of last week was the report on inflation in the United States. Recall that the Consumer Price Index in September increased by 0.4% compared to August and by 3.7% year-on-year. More simply, inflation is not decreasing. Nevertheless, investors do not expect an increase in the Fed's key interest rate. This may be caused by the fact that the increase in inflation was largely due to the increase in the value of the black gold, while the cost of most other goods and services did not show a significant increase. But despite the decrease in the probability of a further increase in the key interest rate, investors expect it to remain at such a high level for a long time. This is not typical for the Fed, which supports the US dollar. It is important to understand that the longer the key interest rate remains high, the longer the yield of US government bonds will not decrease. The high yield of US debt instruments practically guarantees a high demand for the US dollar, leaving it in the spotlight. For example, the Euro-USD currency pair has been held near the minimum values for more than 10 months. While the US dollar is again approaching historical highs in the pair with the Japanese yen, which is directly related to the difference in the yields of US and Japanese government bonds. Comparing 10-year bonds, the yield of American securities exceeds by almost 4% or 5 times. Consequently, investors from Japan are interested in buying American currency, including for the purchase of US government bonds. Continuing to talk about the monetary policy of the Federal Reserve and the high yield of US government bonds, it is logical to expect sales in the precious metals market. And so it was, but only until the moment of a record-breaking attack by Hamas militants on Israel. Therefore, last week and especially on Friday, gold soared high up. Nevertheless, it is extremely difficult to talk about the sustainability of this growth because in general it is a defensive reaction of investors to another war. Recall that in the first 2 weeks of the war in Ukraine, gold also showed growth, which did not turn out to be long-term and sustainable. Again, given a high yield of US government bonds, there is a risk of sales in the precious metals market, including against the background of profit-taking on long positions. The war in Israel, which is increasingly shifting to the territory of the Gaza Strip, is accompanied by a significant increase in the volatility in the oil market. Of course, military conflicts of this scale in the Middle East are a risk factor, and as a consequence, a growth driver for the black gold market. While the unexpected increase in reserves in the United States puts moderate pressure on oil quotes. And although last week ended with an increase in oil prices, traders need to be prepared for the appearance of multidirectional and sufficiently strong price movements. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.